Alright, hello. I decided to do a little tutorial video for Ride the Run and just wanted to go over it and show you how it works. So this is the description that I have for the indicator. It says that it was developed to catch continuation moves after small pullbacks on MNQ or NQ during the New York session. Trade entries for the system look for basically a strong push in one direction, a small pullback, and then entry when price resumes trading in the direction of the initial run. It's been coded specifically for MNQ or NQ. Some of the functionality will not execute correctly on other charts. However, if you do trade other charts and want to apply this strategy to them, just let me know and I can code in specifically for those charts and just continue to add to this indicator as we trade it. So when a trade entry occurs, this indicator will automatically plot the entry and stop loss and take profit levels so that you can visually see where you should be entering, putting your stop loss, and taking your profit. It does that by identifying the most recent swing low or high within a certain number of candles in order to set your stop loss at. And then based on that distance, it calculates based on your preferred risk-reward ratio that you input and sets the TP or the profit target. You can then also input the max position size that you want to take. So if you want to risk only $100 per trade, it will do the calculation for you based on your stop loss distance and input how many contracts you should be entering in on your trade. That way it's very quick to look at that and just hit the button and go when the trade happens. There are two alerts available for this indicator. Number one is the trade entry. Basically, obviously, when the candle to enter on is forming, a little buy or sell indicator will come up on the candle, and then when the candle closes, it will persist. So it may print and then erase as the candle is not fully formed and still waiting to close. But once the candle is closed, it will just print and stay there if it was a valid signal. The other one is a potential entry. So this one basically alerts you that you may get an entry very soon within the next few minutes. And so it's looking after that strong push in one direction. It watches for that pullback to start happening, and it will say, hey, the pullback is happening, look for an entry here soon. And then once that entry happens is when the trade entry signal triggers. So let's scroll over here to the chart. Just go back to the last day on our chart here for MNQ. And this is what the indicator looks like. It has a specified trading window that I have coded in. Basically, it starts at 7:45 my time to 9 a.m. my time, so that it's 9:45 a.m. New York to 11 a.m. New York. And I've found doing some testing that signals that happen during this time give me the highest chance of winning with this particular strategy. And I'll share those results with you towards the end of this video. So let's discuss the indicator here. Pull it up. We've got our options here for the indicator. Number one is the white-black label text. So I know TradingView offers both light and dark modes, and so if you've got your labels on your signals colored white and you're using the light background, that's not going to work. It's not going to show up. So all you do is come in here, toggle this on and off, and it will flip the color of that print for you. So there's that option. And then next is basically what outlines the trade. So whether you have this on or off, it doesn't matter. It will keep the buy signal on there in case you like to keep a cleaner chart. If you do enable this though, it will pop up this little table here. You can move that table anywhere you want on the chart. I like to keep it in the top right. That's what I've put as the default. for that, and it will just display the contracts and how many you're supposed to enter in based on this value here. So the max risk per trade is expressed in dollars, and here you just say I want to risk, default I have is $20 or $200, and it will determine the distance of your stop loss and calculate how many contracts it will be in order to get you as close to 200 without going over that value. And then it will print it up here. So for this trade, it was 5 contracts. The next thing is the candle look back for recent high or low. That's for determining your stop loss. So basically when this signal candle happens, it then looks at the previous 5 candles, 1, 2, 3, 4, 5. It finds the lowest point there and plots your line for your stop loss. The TP ratio, you can have it at 1 for a 1-to-1 risk-reward ratio. 2, if I adjust it there, you can see it will modify that distance to be a 1-to-2 risk-reward ratio. You can do fractions of a ratio as well, so if you like the 1 to 1.5, that works as well. And then this number of bars for trade display, I have it as a default for 10. Obviously the lines that are drawn here do not go out very far, but if you like them to, say, play out for the whole trade or whatnot, and you want to just see that as it goes, you can extend those for however many candles you want, and it will just help you see when it actually hits your take profit. If you click over to style, the no trades just indicates this grayed out area, meaning that's when the signals do not print. If you unclick that, you can take the gray off. It doesn't help you see when the signals will be happening, but it does, once again, keep the chart cleaner. Bias line, this is this line right here that prints after the market hits the 15 minutes after market open. Basically, the indicator looks for buys above it and sells below. The trend is the white line here that helps identify which direction price is moving and is another confluence used for generating the signals. Your buy and sell labels, which are these triangles that print. And then if you don't like these lines on your chart for the trade, you can just come in here and turn those off. Also, this controls the table as well. Once again, you've got that input on the other slide here. If you unclick this, it'll remove that table. Same for over here on the style. You click right there, it'll remove the table. Alright, so that's basically all there is to this one. You will get maximum 1 signal per day, and it seems to currently be doing very well as a trading system. I have posted this over in the Discord for information on backtesting that I've been tracking for a certain set of settings. I've been looking at a 1-to-1 risk-reward ratio, a 1 to 1.5, and a 1 to 2. Also, I've been tracking, say, the max move of any particular signal that has been generated and calculated an average R return based on all the signals that it has generated. I like to keep that in mind just in case it does end up surpassing the 1 to 2 risk-reward ratio, so I can see whether or not going with the average max risk-reward ends up giving me a greater return than one of the usually defined risk-reward ratios. So the rules, just a 1-minute time frame on MNQ or NQ, set the stop loss at the recent swing high or low, trade it on a Heikin Ashi candle chart, and take no trades after 11 a.m. Eastern Time, which has already been coded in, so you don't really have to worry about that one. So since I've been tracking this since June 9th till July 25th, we've had some very good results. On a 1-to-1 risk-reward, about an 1 to 1.5, about a 71% win rate, 79, 71, and then the 1-2 is, say, 67% win rate. And you can see the R returns up here, so assuming you risk, say, 1% of your account per trade, this would be, say, 14% gain. Obviously, the 1-2 is doing the best, despite the lower win rate. So once again, that just confirms that as long as you have a decent system and the moves are significant enough, you can typically have a lower win rate with a higher risk-reward ratio and still make more money in the market. And then here we have equity curve for that backtesting data that I've generated over the past couple months. And starting with, say, a $50,000 account, you can see it's had a pretty good straight run up. I think the max consecutive losses that I experienced during that backtesting on a 1-2 risk reward was 3 consecutive losses. So there's the data. I'm excited to continue to trade this as the markets go forward and hopefully continue to make some good gains in the market. If you have any other additional questions, go ahead and feel free to DM me or just ask in the Discord, and I'd be happy to help you out. Take care. Bye.